All right, hello again, everybody. This is Mike Rixey. I'm the lead options instructor for NetPicks. And in this video, I want to follow up on our Google trade that we sent out here yesterday. We talked about it in yesterday's video. If you have not had a chance to review that video, highly recommend that you go back and watch it. We walk you through why we identified the trade, how we took it, how we planned on managing it, and I'll walk you through what we did in just a moment. I'll walk you through what we did to close it out here for a great profit this morning. We'll also take a look at another brand new setup that is printing for us. It's on Roku. I'll walk you through that trade in just a moment as well. Before we get over to those two markets, let's just talk about this move here today on SPY. If we take a look at the S&P 500 coming into today, just from a technical perspective, take the credit downgrade after hours yesterday, take that out of the equation. If we just look purely at price, we have come into the last few days with very overbought markets. We are very overdone on the upside, very much in need of a pullback. And you can see it on this daily chart. I mean, it's just been a straight rocket ship into the upside. Well, we did have the news break yesterday. It really does not matter to us how that impacts markets fundamentally. I'm not a fundamental guy. I'm purely a technical trader. I believe that the entire reaction to this big news event is going to be priced into the charts immediately. Before we can ever go in and research and interpret the news, price is going to tell us everything that we need to know. Big picture, does it have the potential to move markets the rest of the year? Sure. But the way that we trade, all I'm concerned with is what is the market going to do over the next few days on out to the next few weeks. What happens later in the fall, later this winter, we'll cross that bridge when we get to it. If we take a look at what's happened here today, we finally started to see some selling, but we are coming into a very key support level. Notice that on the lows of the session, we are testing the 20-period SMA and the 20-period EMA. Those are the green lines here on my chart. They are sitting at right around 450.5 for both of them. If those levels break on a closing basis, whether it's today or the next couple of days, that opens things up for a deeper pullback. That would be a welcome sight. Not only would it be helpful to get a pullback in price, but look what's happened to volatility here today. The VIX is back up around 16. It's up $2. We're finally starting to see some fear priced into the market. And as an options trader, we love that. I want to see the volatility elevated because it gives us more opportunity with a wider range of option strategies. I'd love to see selling. It opens things up in both directions. Now we're not left just chasing the highs on a daily or a weekly basis. If we can get some two-way price action, which I fully expect between now and the end of the year, I think it's going to provide a much better environment for us to be active in. So I love what we're seeing here today. It's happening on bigger volume. We've already had close to 50 million shares trade so far today, and we're only sitting at 1 p.m. Eastern. We're going to have big volume. We have not been able to say that for weeks. A lot of encouraging signs here today. If you're an active trader, you should be thrilled with the price action today. Again, this afternoon, that 450.5 level is going to be crucial. Can we break it, or do we see another dip bought? Yet again, that's been the story this year. Every dip has been bought. Tomorrow afternoon, we have Apple and Amazon earnings out. Friday morning, we have the jobs report. The monthly jobs report comes out the first Friday of the month. All of those events have the potential to provide a pretty active end of the week. So I love what we're seeing here this week. I just think it has the potential to give us a much better market over the next few weeks. Now, let's go over to our Google trade from yesterday. We came in yesterday's video, and this is our hourly chart. This is using our new active trader mode that we will be releasing here very soon. It's utilizing the 60-minute chart, which allows us to stay more active. It allows us to take advantage of the swings back and forth without going to a day trading approach where I don't have to sit there all day long from opening to closing bell. I don't get caught up in chop. The 60-minute chart does a great job of filtering out a lot of the noise while keeping us very active. And what we talked about here yesterday is we had our magenta colored dots. And in that video that I put out yesterday, we talked about how those dots were sitting at 130, 130. Okay, we had a close above our upper channel. We had an entry point just below the midline of our channel, and that level was hit. The entry point was at 130, 130. I knew where my entry point was to the penny, and we came down and we touched that entry. That gave us the green light to put on a bearish trade. The whole idea with our active trader mode is to utilize the long calls and long puts to put on an aggressive directional trade. We came in and we bought the long puts. We specifically bought the 132 puts with the options that expire on Friday this week, on August 4th. It's an aggressive trade because with only a few days left to expiration, the time decay is extreme, but so too is the gamma. And the gamma tells us how quickly the option is going to react to changes in stock price. When you get a directional move like we had here today, and it happens quickly, things can add up in a big way in a hurry. And that's exactly what we saw here today. The timing was beautiful. Markets have sold off. Google, I mean, in the grand scheme of things, Google's down 2.5% today. Is the market crashing? No. But because we were able to identify the entry point to the penny, that trade triggered in, and we utilized the right strategy, we were able to book over a 200% return. We bought the option for $1.28, $128 per contract. That's my max risk on the trade. We closed it out here today at $4.30. That's a $302 profit. That's a 235% return in and out in 24 hours. Now, I would love to tell you that every trade is this easy, where it triggers in, it immediately goes down to target 24 hours later, and you've got a large return. Okay, they're not always going to be this easy. However, had this trade not worked out immediately, I knew where my stop level was at. We had our upper level of magenta dots up top. Our stop was at 134.76. Our target was down at 128.10, and that level was hit. So once that level was hit, notice how accurate the system was. We came down and we touched that target, and price has found some support there. It is stabilized since we touched that level. As soon as that target is hit, there's no guesswork. I don't try to justify holding the trade. Maybe I have an opinion that the market's going to fall out of bed the next few days. Maybe I want to hold. Well, I'm not going to do that because the system gave me a very accurate target. As soon as that target's hit, takes the guesswork out of the equation. I don't have to sit there and try to justify whether I should hold or close. I'm closing it out immediately. And I'm booking my really impressive profit, freeing up the capital, and moving on to the next trade. So really nice trade there on Google. Typical holding time for us on this 60-minute chart, anywhere from 1 to 3 days is very, very normal for us. All right, they don't always just immediately make a beeline down a target like this. There are definitely times where we have to hold for 2 or 3 days, and we've got to survive some choppy stretches. But this one, very clean, very quick setup. These are great trades. This is really why we have designed the system the way we have. We want to be active as much as possible. Now, let's go over to our 130-minute chart. That hourly chart, our active trader mode, I love it. Okay, it's a great way to stay more active. It gives us a lot of setups. However, it's not the only approach that we take. The beauty of the reversal wave trader program is you have a lot of flexibility in how you take the trades. The active trader mode, which we talked about on Google, phenomenal. Keeps us very, very active. Original RWT setup utilizes the 130-minute chart, which is more of a true swing trade where we're holding anywhere from 3 to 20 days. I like to use a mix of both trade types because as much as I would love to tell you that the market's going to be this active on a daily basis, I mean, SPY, look at the S&P 500, SPY market has had a, I'm looking at it right now, $3.50 range from high to low here today. It's not always going to be this active. We're not always going to have these quick moves. And there's going to be times where I have to be okay holding positions for a period of a few days, potentially even a few weeks. I want the potential to diversify. I want to have a mix of trade types on. The more I diversify, the better my consistency will be. Diversification takes a couple of different forms. Yes, it can be in the markets that you're trading. That's traditionally what people think of when they hear diversification. But for me, I also want to mix my weekly options with some monthly options. I want to mix some long calls and long puts, like we talked about with Google yesterday, along with some vertical spreads. The better mix of trades that I get, the better my equity curve will be over time. That way I'm not throwing all my eggs into one basket, hoping that one trade is going to work. I have the flexibility to adjust to different types of market conditions. So the indicators look very similar, right? The main difference is this is a 130-minute chart. It's going to be a slower time frame. It takes longer for things to develop, which can filter out a lot of the noise. And this is also a great time frame. If you have a busy schedule, if you're not able to check markets multiple times a day, the 130-minute chart is great. It takes very little time to babysit on a daily basis. For me to come in and take a look at my 130-minute charts, it literally takes me 10 minutes a day. It's a very simple process. So looking at Roku, if we take a look at our pulse indicator down at the bottom, our pulse indicator is being used to identify overbought and oversold conditions. If I take a look at those yellow bars on my pulse, what do those mean? Those indicate that price is between a 1 and a 2 standard deviation move on the upside. It doesn't mean that price can't move higher from here, it just means it's not statistically probable. When you see a 1 standard deviation move, only 13.6% of all occurrences fall outside of that range. Again, it's possible, it's just not probable. If I continue to lean bullish here on Roku, could it work? Sure, it could. I just know I'm fighting a lot of long-term numbers. Odds actually favor either a period of consolidation or a reversal, in this case to the downside. It does not mean I'm calling the top in Roku for the year. It just means in the near term, meaning over the next couple of days out to the next couple of weeks, we expect either a pause or a pullback. Now, could I come in and just buy a long put here? You could. The problem is you're totally dependent on that stock moving lower. With Google, I was okay with that. I knew it was an aggressive trade. That was our active trader mode. We had a valid setup. I was fine with that. But with our pulse setup, keep in mind, we're either predicting a period of consolidation or a pullback. If we end up getting that period of consolidation, I want to utilize a strategy that gives me higher odds of success. That allows me to make money if we just move straight sideways. The minimum requirement here on my pulse indicator is I need at least 3 out of the past 5 bars plotting yellow. We've got that. We have all 5 of them yellows. That gives me the green light to go over to the trade page. But now what we're going to do, instead of using an aggressive position like we did on Google, we're actually going to use a credit spread. Now, don't get intimidated by the terminology. If you're newer to trading options, if all you've ever done is buy long calls and long puts, don't get intimidated by this strategy. All we're doing is we're trading 2 options at the same time. It is still a fully risk-defined trade. I know what my maximum risk is right up front. Instead of going with the August 4 options like we did on Google yesterday with only 2 days left, I'm going to go out to the August 18 options. Those have 16 days left. We're typically going to go out around 20 days, give or take a few days. I want to be closer to that 20-day mark just in case it takes longer for our desired move to take place. So let's go out to August, and we're going to go out to the 95-97 call spread. So all I'm going to do here, I'm going to use Thinkorswim as the platform of choice. You can do this in any broker platform. But inside of Thinkorswim, I'm going to right-click on the 95 call. We're going to go to sell, and I'm going to go to a vertical. That's going to pop up an order down at the bottom where I'm selling the 95 call to open, and I'm going to buy the 97 call at the same time. There's a $2 difference between those strikes. I want to collect at least 50 cents. 50 cents or higher on the trade will leave me with a risk 2 or 3 to make 1 scenario. This spread is trading for 65 cents. If I collect 65 cents on the trade, it would leave me with a risk 135 to make 65 scenario, right around risk 2 to make 1. All right, so if I were to sell this spread as is, I would make money 5 different ways. Remember, with the long put yesterday on Google, we had one way of making money. The stock needed to move to the downside. That's the only way I was going to make money. Fortunately for us, it did. In this case, I give myself 5 ways of making money, and here's those 5. I make money if the stock moves up, down, or sideways. In all 3 directional moves, I'm okay as long as price stays below 95. That's the strike price of the option that I'm selling. I also make money from time decay adding up and from volatility decreasing. As time passes, every day that passes, I'm not fighting that like we were on Google. I'm putting that time decay in our favor. So now I have 5 routes to follow. I'm not dependent on a directional move. If we get the directional move, great. My ideal move is to the downside. That's going to allow me to make money the fastest. But if I don't get it, if we just sit and chop sideways, or even if we move slightly to the upside, I'm okay there as well as long as the stock price stays below 95. It's now trading right around 91. I've got about a $4 cushion here where the stock could move against me to the upside and I'm okay. Any type of a move to the downside is going to push me into profit the quickest. All right. If I collect 65 cents, that's my max profit potential on the trade. The only way I can book that entire profit is if I hold all the way up to expiration. That's not something I want to do. I would rather close it out early, book my profit, free up the capital, and move on to the next trade. What we like to do is target 50% of the max profit. If I get filled here at 65 cents, I would be targeting 32 cents as my target. Anytime over the next 16 days, if that spread trades for 32 cents, I'm going to look to close it out. Book the profit, free up the capital, and move on to the next trade. Now, I mentioned it's a fully risk-defined trade. My max risk is $135 per spread. A lot of times people get intimidated by selling options because they think they are exposed to large losses. It's not the case. Worst possible case here is if the trade goes against me, if the stock continues to move to the upside, it's not probable, but it's possible. If that happens, the most I'm out is $135, and the only way I take that full loss is if I hold all the way up to expiration. I can always close it out early and take a partial loss. So we like to use a 70% stop on a credit spread. So now I've got my target factored out. I've got my stop factored out. So now I know exactly what to do from start to finish on this trade. If we can get any type of follow through on the downside in this market over the next few days, that'd be great. We'll book the profit. Again, free up the capital and move on to the next trade. So very different from Google. In all likelihood, on this Roku trade, I'm going to have to hold potentially for 3 to 7 days. The benefit there is I give myself more time to be right directionally, and I don't have to sit there and watch it as closely as I did on Google here today. They're both great trades. I love to take both because it gives me that diversification that we're looking for. So if you really want more consistency with your trading, highly recommend that you mix up your markets, mix up your time frames, and mix up your option strategies. If you can do that, you are going to be so much better off than 99% of the options traders out there. So like Google, I will continue to track this trade here over the next few days. If we end up taking the trade off here over the next few days, we'll let you know. We'll let you know exactly what we're doing. If you have any questions on this specific trade, feel free to leave a comment on the YouTube video, or you can email us directly. Mike@netpicks.com is my email address. Again, guys, the beauty here is the indicators that I've showed you here today on the 130-minute chart. These are the indicators that you can have on your own charts. You can have all of the criteria that we look for in our options trades. We outline all of that for you. That way you can be in the driver's seat and be in complete control of your trading long term. And we're going to be releasing our brand new update, including our active trader mode. We're going to be releasing that here coming up next week. So we'd love to have you join us. We'll get you more details on our webinars next week. We'd love to have you join us with our reversal wave trader program. So I'm going to wrap this video up here. Congratulations to those of you that took the Google trade yesterday. Great trade there. And we'll circle back with you guys over the next few days with our next video.